All right, hello and welcome everybody. We've done our sound checks and we're just going to get right into what's going on in this market. Do take a moment to read over our required disclaimers and make sure that everyone's, as you probably know, apart from maybe your emails, which generally should state that trading is risky, and today's presentation is educational in nature, and it's really just to share some dynamic indicators and what we've been doing to read this market and navigate things and what we're coming up with. While we can't, as the old saying goes, you can't please everybody all the time, is the old saying. The material that I put out, many of you are familiar with my work. This is my work. This book, by the way, and I have this brand new feature. It's a pen writing tool that we use, which it's not brand new, but I started to try to learn how to use it. It's based off the mouse, but so my drawing is horrible, by the way. Can't draw a straight line on this tool with the mouse to save my life, so I'll try not to be obnoxious with it. But this book, kind of proud, this actually launched a lot of people's, it reinvented and it reinvigorated the use of pivot points. That's in its 10th year. This is the 10th year, and I'm related to let everyone know I was asked to come out with a second edition of this book, Candlestick and Pivot Point Trading Triggers. What's really neat about this is this book really did help popularize pivots, and as well as it really gave us some powerful tools to work with that I introduced the world to. One was the last conditional change, what we use, which I'll demonstrate today, how effective it is on a trading platform. Of course, the high close and low close dogee scans, which to this day I've never been able to show me something that's of better use and power and as reliable of a system, and something that we'll share with you today. Mastering the Stock Market came out, and I can't believe it's now 4 years. This one came out, and it talked about the use of how to really effectively use the market internals and how we broke it down, something I'll share with today. A lot of people are familiar with the term market internals if you're a stock trader. Mainly, we have the McClellan oscillator, and many of you are familiar with advanced decline. Most of that is based off the New York Stock Exchange Composite Index, and we took it a step further as we introduced into that book. Also explained the difference of why volume histogram is not as an effective tool as it once was. And ironically, I was just in Tampa over the weekend giving a presentation to a group of investors, and I asked the same question. I said, how many people struggle with the volume histogram? And a lot of people, just shameful, just raise their hand. Yeah, it's still been a struggle for a lot of people. And what I mean by that is, we see a trend going up, and the volume histogram doesn't confirm prices, but, the volume showing lower prices, and yet the market continues to go up. And that was something we identified and addressed about way back in '08, actually. And so we've actually put out a lot of different trading ideas, systems, and methodologies out there that has been extremely effective in this crazy world we live in, even up to this week. So we'll go through some of that. And part of my work in seasonality was, for my background, you're probably familiar, I've been around. If I was a horse, they would have put me in the glue factory by now. I started back in 1977. So I've been around, I've been everywhere. I've been on the floor, had my own brokerage firm. And just as an avid student of the market, just seeing what the ebb and flows of the tape, partly what we did is, if you got into the business back in the late 70s, early 80s, you learned to understand seasonality. Now it seems the cat's out of the bag. Everyone's looking at seasonality. And, the funny thing is I think there's some very strong misunderstandings of how to effectively use seasonality, and I'll try to touch on that a little bit today. But I am a member of what's known as APTA. It's the American Association of Professional Technical Analysts. It's a privilege as a voted, you're proposed and voted in, so it's a nice group of people that are involved in that organization. It's most of us are all been in the MTA or have been professional technicians all our lives. So that's what APTA is all about. So anyway, what do we need as traders? I always like this slide and start off with this slide. I think what traders can use is and pivots will help you. And then again, I think everyone needs to make trade decisions based on facts. A lot of times with the age of information, we're not really making trades based on facts. We're making trades based on opinions, based on the media, based on others' opinions. So that is kind of what we see happening. Able to move vast sums, billions of dollars at a flick of a light switch. It's no longer taking, days, weeks to move mountains. They can do this instantaneous, and that's where we've been seeing this like a ginormous sector and indexing rotation. It's just been going on and on since about 2014, and we can see it in the markets today. So I call it the 12-point program of my technical. And just to go through some of these real quick, many of you might be familiar with the PPS buy and sell signals. Those are available on several platforms. In fact, PPS was introduced on the Thinkorswim trading platform under my name, John Person. Go to studies, and that is the buy and sell arrows. We like to call them on a compliance basis. We like to call those bullish and bearish momentum. Candlestick patterns, the HCD, LCD. This is a system. And I'll go through that real quickly. It's bullish for high closed dogee, bearish for low closed dogee. And we use this. This is really what helps generate a very efficient trading plan and what we look for trading opportunities. And the last month and a half has been nothing but full of opportunities. And good opportunities and just some very attractive trades. And then again, someone had asked earlier, typed in person's pivots. Can you use those to day trade? And the answer is yes, absolutely. Person's pivots, there's something a little bit more that people don't understand, the difference between pivots, the person's pivots, the floor trader's pivots. Mine is more of a system. It helps to define the trend, whether it's bullish or bearish, which gives you a trend directional idea, and that will give you the determination of support and resistance for most time frames. What I like to use is, if I'm day trading, I look at the daily and again the weekly outlook, I look at the monthly outlook, and then longer term trading, I look at the quarterly. Now this is very important even for day traders, monthly and quarterly, because this is something I'm going to introduce to you today. I once remember, and I'll never forget this, over 20 years I was giving, it was actually 25 years ago, I was doing a presentation, and I don't know if you guys recall, maybe it was like 90, maybe it was 96 or 97, so 20 years ago, maybe 19, 20 years ago, it was Hotcom, I think it was, or it wasn't PayPal, it was another online web room type platform. And I came in and introduced, this is where day traders and swing traders can benefit from these higher degree time frames. And someone said, we're day traders, we don't need that stuff. And I just said, you know what? If you're not willing to be to listen, then I'm not willing to teach, because people have all the answers. I'm still here, and I guarantee that individual is not here anymore. Guaranteed. So it does pay to listen, and I'm going to share something with you which really was very instrumental in January when the world was falling apart and everyone thought the world was coming to end and everyone was going short and everyone thought this market for sure was crash diving. We found something very interesting in the markets, and I have a lot of students and class members and traders in this presentation tonight, just to make sure that they agree and that they were there for this. We were finding a boatload of stocks at monthly and quarterly pivot support, And that was just a dynamic turn of events, which actually by January 19th, we also ran scans, folks, and found that there was a lot of buying going on in preferred stocks, especially in the financial sector. So this was very important to understand this. Obviously, we like to look at chart patterns, seasonal analysis, and volume analysis to a degree. We look at specific indicators for volume. Now, for TradeStation, I have a proprietary histogram that is just a dynamic tool. We also look at relative strength, commitment of traders data, but for equity indexes, breadth analysis, which I'm going to show you a little bit about today. And most importantly, what the heck is this last conditional change pattern all about? And I guess the final aspect of trading is money management. But those are my 12 bullet points that I like to look at. First thing I'm going to share with you is this chart here, and you're going to look at this and say, what the hell is this? How does this help me trade? And I'm going to tell you that this will really help you immensely understand the direction of markets. If you want to figure out where markets are going to go, then you better see where markets have come from. This is a lot of the different sectors, from computer technology to KIE, is the insurers, ITB home builders, biotech, regional banks, XRT retail ETFs, semiconductors, OIH, which is the oil service holder, XOP, oil and gas production. You got the transportation, IYT, materials, energy, financials, industrials, technology, staples, utilities, healthcare, and consumer discretionary. Those are our top sectors that we trade. Ironically, up until the other day, only utilities, consumer staples, and the XRT flipped its head positive. Ironically, at the end of the year, this is biotech down here. It was down 22%. You can see this was the other day. This chart is not current as to today. This is about 3 days old because there's March right down here. But notice what was happening. The blue line, we're starting to see the purple line. We're starting to see, like a horse race, a lot of sectors were starting to get lifted off the lows. Now, from a year-to-date perspective, and that's what this shows us, where have stocks been, where have sectors been, and where are they starting to go? They're starting to do what? Get more positive, less negative, more positive. So while my theory is relative strength in terms of percentage, not price change, is very important, we can see what sectors are starting to outperform others. And here's a neat little trick that many people that are using certain relative strength tools, they don't go back far enough. If we look back from just a year-to-date perspective, we find out the majority of markets are negative on the year. If you go back just 2 years, you'll find out, or in this case, as you can see, this goes back since for 2014, 15, and year-to-date, you'll find out the majority of sectors are still positive on the year and getting more positive. Now, ironically, you've got 3 sectors that look extremely ugly, and you could probably guess which ones they are. XLE, XOP, and OIH. Those are the 3 that over the last 2 years have been negative. So here's the question. They've been negative, right? It's not like they just crashed and dived right at the beginning of the year like everyone believes, that the stock market just started to crash and burn. And while, yes, we did get a correction, and yes, we did fall out of bed, and yes, for the first few weeks in January, it started to get scary for most traders. This is one of the things that I think will really help get you more gauged and strong-footed to identify particular trading opportunities. This is a dynamic tool that helps you ground yourself as to, hey, yes, we're liquidating, and yes, the market's going down, but you know, it just didn't start going down today, right? Some sectors started to cave, but man, the majority of sectors had already started to peak out. In fact, it might be hard to see here, but if you look at this red color here, transportation, IYT, it actually started to peak out back in November of 14. That was its peak, and it's been going down ever since. It just didn't start to crash. Also, materials, industrials, they didn't just peak out just in January. They had already peaked out. So I guess in essence, You could say the majority of sectors, except for Wild West biotech, which is the green one up there, a lot of stocks in a lot of different sectors had already been in a downtrend and have already been in, I guess you would say, started a bear market back then. It just now people came to a realization that this was weighing on the market. Now, if I told you over the last couple weeks, and I know a lot of people think I'd be crazy when I say this, we've actually been in a stealth bull market as we were starting to see a lot of stuff and a lot of sectors and a lot of stocks within those sectors start populating some really big buy signals. What helped us identify that? That would be, for example, pivot points. One tool that helped us to identify that there was some buying opportunity in the market in not just industrials, materials, transportation stocks, and retail sector stocks. You know that many of you are probably familiar with, we heard this 6 months ago, that eventually cheap gas prices are going to help the consumers and they're going to, it should be good for the economy. Well, guess what? Once we started to, I think the market started to dissipate that fear, we started to subtly see some nibbling going on in the market. And one of the things that our scans picked up, folks, was we started to see a lot of buying coming into preferred financial stocks. And that, my friends, I'm going to share with you, because for big money, if they're thinking that the market's going down, they're not buying preferreds, they're not buying common, they're hitting for the hills. The funny thing is, money was going into the stock market over the last 5 weeks, and it didn't really show up until maybe today. People are scratching their heads and figuring out what's going on. But the person's pivot, it's a filter, and it helps us identify by virtue of a pivot point and a 3-period pivot point moving average, the change relationship in the market, number one. And then it helps give us a clue that when we start to see the pivot point get above a longer-term pivot point moving average. So I want you to understand, blue is above gold. The market condition is changed to bullish. And that way we get a reflection of a higher high and a higher low. That's person's pivots. That's the essence of what makes the thing work. Just remember, if we get a blue above a gold and the market is still maintaining above that relationship, the market is still bullish, and it's going to give us a bullish outlook. So I want you to remember, if you're a day trader, you better be in sync and in tune where the monthly pivots are and where the market is in relationship to that pivot point. This might seem hard to grasp right now, but trust me, it's so easy to focus, especially if everything's color coordinated. Blue is pivot. If the market's still trading above pivot, it's bullish, baby. And when the market breaks below that pivot, that's when you want to start to look for selling opportunities. As long as we're above those pivot levels, things really can get exciting like we did today and like we have been for the last few weeks. So let me explain and I'll get to some charts. I just wanted to go what I think is just as about as perfect as it can get, because nothing's 100%. But I'm here to tell you, when you combine powerful indicators, non-correlated indicators together, and the right ones together, you can get some dynamic trade setups and signals. So the first thing that I like to teach you guys is just in the I guess the essence of the 10-year anniversary of candlestick and pivot point trading triggers is we've got a little background of what pivots are kind of like, what's important about them, why the higher degree time frames are important. I mean, it's critical to look at those higher degree time frames. But when we combine pivot mathematical formula to individual candle patterns, and the one I'm going to share with you is what the HCD-LCD is all about. It's approximately a 67% high probability of a successful signal. It comes with specific entries. It tells you where to place your stop. It tells you the expected time frame to see your results. A lot of times if you sign up and you get my tweets, and I'm going to share this with you real quick. I tweet this out for a lot of the community people, our members in the room. If we go over here and try to expand on the Twitter, you will notice that I put out a lot of stuff on HCDs. You'll see HCD. Here's a weekly HCD. What does that mean, weekly HCD? If you don't understand, it stands for high close doji. It means you buy on the close of the next session open, and it's a weekly high close doji. So what that means, when you see we've got dailies, that means we're probably looking for a move over the next week to 10 days. If it's a weekly high close doji, it probably means we're looking for a move over the next maybe 2 to 3 months, an uptrend that should last over the next few months. So you'll go through and you'll notice, man, we put out a lot of HCD acronyms. Here's a few HCDs, and you'll notice from January 22nd, I'm putting out a lot of HCDs out there. You notice that? So what it means simply is after a downtrend exists, we get a doji. Sometimes the market moves a little bit lower first within a few bars, but then within a prescribed period of time, you get a close, not a trade, a close over the high of the doji. That triggers the buy. Enter in on the close, the next session open, your stop goes underneath that swing low. And we should expect results within the next couple time periods, and then expect the trend to last between 8 to 10 bars. So if it's a 5-minute high close doji, it's 8 to 10 bars. If it's a daily, it's 8 to 10 days. If it's a weekly, it's 8 to 10 weeks. Monthly, 8 to 10 months. It defines the trend. It tells you unequivocally where does your entry go, where does your stop go, and what's your time horizon expectation to get out of the trade. It is an incredible system. This is something I introduced the world to over a decade ago, and it is still effective in the market condition we're in right now. Now, back in the day, when this is the book I'm talking about, its 10-year anniversary, back in the day, nobody on this planet ever came up with the idea of back testing the relevancy of when a doji or a shooting star, what the relevance of highs and lows of an intraday basis would be. But I did, and I introduced it in that book. And we had an amazing result about finding on a 3-year back test on a 15-minute chart, friends, on a 15-minute chart, about 30% of the time in the S&P, the E-mini S&P, the low of the day was a doji. 40% of the time, it was a hammer type pattern. The difference is a doji kind of looks like that. The hammer looks like this, real simply stated. But what we really found out was that sometimes, and this is where my work combined, when the market was near a predicted pivot support and you got a doji formation, it wasn't that the doji marked the low of the move. The doji just maybe told us that it was near the low of the move, especially if it was near the pivot. So if the market had traded low and then formed a doji, you would wait for within the next few time periods if the market closed above the high of the doji, and that gave us a signal to trigger an entry in a long position. It told us where our stop would be. Now, as a day trader, if this doji type formation happened 10 minutes before the close, you probably don't want to take that trade. But anyway, this is the kind of work that we introduced the world to. Now, let's fast forward a decade. If you're a stock trader, let me share something with you because this is dynamic. From about January 25th to even February 22nd, our scans picked up weekly and daily high-close doji patterns in a diverse multitude of stocks, and a lot of preferred bank stocks too. I'll share that with you. That was very interesting of what our system uncovered. And of course, a lot of the ETFs, like, and I'm sharing with you right now, something we talked about in the room, is the biotech sector, industrials, looking at the insurers, retail, the XHB preferred, it's the what we call the peripheral ETF on home builders. And again, the home builder ETF itself, and then transportation. We had names like Capital One, BB&T, Zion, and H-Band, all preferreds. This is a stock, the transports, which we just traded dynamically. You might not be familiar with it, but it's a small little trucking company called Roadrunner, RRTS, United Airlines, Swift, Save, Caterpillar, which is something I've been joking about. It's the year of the cat because of that Al Stewart song. Caterpillar could see a dynamic upside move over the course of the next 8 to 10 weeks. In fact, it's up about 6.5% since it actually did generate that high close doji. Consumer discretionary, we got all kinds of stuff, but notable positions that we're currently in is for one, Whole Food, but we've actually, and I'll share GoPro in just a second, we'll go through some of these names. H.B. Fuller, a paint company, CF, of course, in the material sector, Home Builders, KBH, DHI, Target, Urban Outfitters, J.C. Penney, which we just flipped out of half the position on Friday. It was just an enormous move. There were other retailers. One we covered today, which I didn't take, but was Dillard's. Wait till you see some of this stuff. And then social media, just as we tweeted out the other day, was Baba and Twitter itself. In fact, on February 4th, I tweeted out to watch for the materials, the industrials, and IYT, and those sector ETFs have appreciated dramatically over the last month. So anyway, let's just cut to the chase and give you some ideas of what we are talking about here. This is the IBB. This is my TradeStation radar screen. First and foremost, let me explain what you see here. You've got several different time frames. You've got PPS buy and sell signals. It tells me whether or not a market, whatever it is, the ETFs, this is something, actually, we created this in 2000. It was a leader, I mean, we just really blew off the top in using TradeStation's radar screen package. I introduced this at a symposium, Future Symposium, back in December of 2007. That's how long we've had this. And there were some other people that kind of liked the idea and, kind of may have similarly tried to do something with it. But what it does is it gives us the trend mode, buy or sell signals that have populated. It gives us how many buy or sell signals have changed or are new. It gives us how many buy signals are populating on a weekly basis. It tells us how many buy or sell signals are on a monthly basis, which is kind of nice to know, right? But more importantly, if you look at this screen here gives us what's really dynamic, which saved a lot of aggravation and made a lot of money for a lot of our members, is this. It identified when the stock market was crashing last month, and we color code this so that it shows us emphatically how many stocks are at pivot support. Like right now, you can see we're already in the consumer discretionary sector. We're already at the targeted pivot resistance. We're already at the targeted pivot resistance for the month, and the month just started today. So it color codes within one snap of a finger. I know exactly the location of stocks, where they are in relationship to their targeted highs and lows for the month. And we've broken it down to a lot of different sectors. We do this for futures as well, just to share with you that. This is in one scroll button. I can find out how many stocks are in a weekly buy mode that are going to possibly be in a monthly buy mode, and how many are in a daily buy mode. I can do it by sector, and this is the IYT. So just since I clicked on it, I'm going to introduce this to you. So the transportation sector, as you can see, this is, and that's the greatest thing about pivot points, you can always back test it because you can't change the data. It's based off the data. So back in January, this is January right here, right? When the world is falling out of bed and everyone's ready to scream to run for the hills, we were identifying a lot of stocks and a lot of sectors were trading already at quarterly pivot support. That's the green. And all of a sudden, if you notice here, formed a doji, a week later, a high close doji. That was one of the top signals that we tweeted out and texted out to people. In fact, here's something that we wrote, and I'll just share. I put this out on a weekly basis. Many of you probably get this or have seen this before. This is my weekly thoughts and observations. What I do is I take a listing of all the my thoughts and observations for the week. And I know you guys have seen this before, but look what the date it was created. I don't change this, so I didn't alter this, and so this is what we put out for our people and myself for trading. It was created at the end of January, on January 31st. You'll note that that is, of course, a Sunday. And one of the things that we talk about is where the market is, a little cycle analysis, you know, where we are with relationship to what PPS, a couple other little things, but then weekly bullish high close doji setups. So we put out that there were 67 stocks populated that are in seasonally strong sectors: the media, energy, technology, transportation, and you'll love to see these names right there: retail, Target, and these are the material names. So let me just go over and just quickly change the symbol here. Let's start with UAL. Here's United Airlines. Here's the high close doji. Here's Target. Ow, wow. I mean, it was just a dynamic, and look what the relationship is. Look at the relationship of where it is in its pivots. So at the end of January, we get doji and at support. So while everyone's thinking that they got to get short the market and it's going down, our analysis and our scans were finding up a lot of buy signals at support. Not just any buy signal, the high close doji. It was a very dynamic turn of the market. And I know we had people come into the trading room and they're saying, yeah, but John, you know, this market's bearish. Everyone's saying it. You had a major bank said sell stocks. And what I was finding is that a lot of the names were all populating at support. And I got news for you. I've been in business a long time because I don't like to sell support. And a lot of the stocks that came up on the radar screen were, I mean, it was just an amazing situation that it just gave a lot of different opportunities. RRTS, if you're a stock trader, this was really a silly one here. Literally, it's silly because there's just no, the risk was just so minimal. A buy signal, again, at support, monthly, quarterly support, gave a high close doji, and then off to the races. Fabulous volume behind the trade as well. So there was a lot of things that we were able to uncover and not fall into the trap of getting short in the hole and come up with some really good stuff. In fact, here's another one that we just did last week. Many of you are familiar with this little Chinese company called Alibaba Group. That didn't mean to be sarcastic, but you know, here we had a different situation. It was just fell below the pivot just a little bit, formed a doji, generated a high close doji. Now, last week I was a little disappointed because I really thought it would just take off like a rocket. It had a little delayed reaction, and we finally were vindicated today and yesterday, by that matter. But I think that, you know, just looking at a market that, and this is one of the little nuances that we've seen, we've been looking at a lot of stocks going down, but not with heavy accumulation of volume. And so we're going to get this, you know, type of expansion in the move that we've been getting. So, for example, TJX. Look at TJ. This is maybe a little hindsight here, but let's take a look at some of the TJ Maxx, in other words. I mean, the funny thing is remember the comment I made about gas prices going down and being good for consumers? So while everyone's looking at the Amazon and the Netflix and they're looking at the high flyers, meanwhile, what's been going on is the market's been just doling out some very generous buys in the market. This is DDS. This is Dillard's, a department store. I mean, this is you know, while it's probably not on a lot of people's radar, and it wasn't a high close doji, but it was a PPS buy signal in that same sector, that space of retail and department store. Man, this stock went from the low 60s to the mid 80s, like in no time. You guys probably may have focused and seen Macy's recover, but this is the one that we were attracted to, JCPenney's. which is kind of like a gift that keeps giving. So if you think about it, there really is, as I stated, a stealth bull market for certain stocks in certain segments of the marketplace. Now, SHAK, Shake Shack, this is obviously one that it didn't just start to fall out of bed in January. I mean, this is not a stock in the consumer discretionary sector that just fell out of bed just the other day, man. So this is a high close doji, and we had some nice follow through. There's name after name. Cracker Barrel, CBRL is the symbol. If I can get it up. Cracker Barrel. Do you notice, and maybe I didn't highlight this enough, but when my system identifies a doji, then it identifies the market giving me that nuance of that close greater than the doji high, and that orange candle will fire off, and that illustrates the fact that we have a bona fide high close doji. Here's just another little example of a stock that was generated a buy signal at key critical pivot, person's pivot support target, and of course the volume off to the races. It's just a lot of names were populating at support. So while a lot of people were bearish the market with, I'm not going to defend the fact that the market's not bearish. I'm going to defend that certain segments of the markets were bullish. And yes, while the energy sector wasn't doing great, we started to see specific subsectors pull off amazing recoveries. Now, when you look at the consumer discretionary sector, the XLY, it nowhere near resembles some of the stocks that I've been pointing out to you. And I'm not just cherry picking, I'm actually have a scanner here which defines a weekly high close doji. We run this scan to find out specifically, I want the best possible setups on the planet. By the way, didn't need to have this, this is just defaulted here. FedEx, by the way, did generate last week a high close doji on Friday, and then again, today's only Tuesday, Monday, Tuesday, we had what you want to see, immediate response to the upside. Note here a commonality with FedEx. Where is it? That green line is a pivot point. So the market came down to pivot support, and it ran out of steam, and it just lingered there, finally triggering and firing off a buy signal, and then you had some follow through the upside. Now, watch this. I'm going to go back to, if I may, and I'm going to go back to a date that resonates with a lot of our traders here, because this is one of the things that we ran a scan. We had a mentoring session down here in my office, and I came in and I told the trading community, hey guys, on January 19th, we were starting to see, and this is really interesting, but on January 19th, we were generating buy signals when the world is falling apart. On January 19th, look at this, BB&T. That's a preferred stock, though. Let's look at the common share. Wait a minute. Look at the direction of the common share. Straight down, hell in a handbasket. Let's take a look and compare that to the preferred. Big difference in direction, right? So BB&T preferred shares were being bought. We see a lot of names, Public Storage, Prudential Financial, Dominion, NextEra. I mean, a lot of preferred stocks were starting to get bid up, and they were starting in certain segments of the market, and that to me was another tell. We were getting more institutional money coming back into the business. And now, of course, these guys, not only since January, again, this scan, look what it says, 119. So if we go back in time, we look at January 19th. I mean, this is, I think, if I could get people to understand how to push a button and turn on a computer, I think that it's going to be a dynamic change, a life-changing event for people. This is January 19th, and this was the preferred stock. I mean, can you imagine as a wealth manager, you got almost a 5% yield. Not only do you have an uptick in yield, but now you have a price increase in premium, just certain names. And you know what? That list of just over and over and over and over again in our scans has been populating in the marketplace. So taking a look at preferred stocks, this is yesterday. At the end of the day, we just got, it seems that even more public storage was being bought. More Royal Bank of Scotland was being bought. All of these preferred names here were starting to populate and have been continuously populating in the marketplace. And then, of course, you know, we've got a lot of the common shares that populated over the last couple of days as well. So preferreds come first, and then everything else starts to populate. So looking at our scans and the way we analyze the market, if I could just teach people a couple little things. First and foremost, very powerful session is, what is a high close doji? How do you run scans for that? Where's the buying pressure coming in? And where's the buying pressure coming in relationship to the predicted person's pivot support targets? That's it. If you understand mathematics, taking a high, low, close divided by 3, and you get a pivot point, throw it in a computer, and let it tell you what the market predicted high or low might be, and then when the market gets down to that predicted low, see if you get a generated buy signal, and then here's the killer. If you get a buy signal with an uptick in volume, baby, you got dynamic changes in the market. This was an old trade that we did last year, actually. It formulated on our scan. We got a scan for, we actually took this trade in the room. We ran the scan, McDonald's. Hey guys, look at the volume looking great. The volume's in the uptick. You know, buy in here. And you know, I think at the time we bought like, I think June options just to get a little long duration and looking for the upside move in McDonald's. And you know, the market moved literally 5% by the end of the day. So you know, it's a very powerful tool that enables us to pick off a lot of different trades and be selective. At the very least, it helps us also identify opportunities right now. This is that's a different chart, different day. Abercrombie and Fitch, which in the retail apparel sector, ironically, is coming alive again. Someone had asked earlier, how does this work for day trading? Day trading is extremely dynamic. If you get a market, and why I teach, I don't like to sell a breakdown of predicted support. Number one, because sometimes the market goes through support and a lot of people think it's going to keep diving, and then what happens is it just lingers, and then a buy signal ensues, right? And then as you start to see an uptick in volume, that's when the market starts to move. Now, here's a funny thing. This is something that I introduced a long time ago, 10 years ago. I wanted to touch base on this with you, as I promised I would talk about the last conditional change. Pretty much what it is, it was an identification that when there was a change in valuation from down to up, you place your stop underneath the bar's low. And then as the market moves higher, when it makes a new last conditional change, you place your stop under that low. And then as the market continues to trend, you just continue to trail your stop, the last conditional change. It works both for a stop in uptrends, and here's the key, folks. Look at the downtrend. The market's moving down. You see this little gray line right there? When the market breaks out above the gray line, that tells you you have a stronger breakout because it took out old resistance on the charts. So the last conditional changes I wrote about a decade ago, and it was in that book, Candlestick and Pivot Point, on page 260. We actually created an actual, believe it or not, a dynamic trading system based off that methodology. So for a day trader, let's just put it to test, and I'll share with you kind of how it worked, like even in today's environment, right? So if you're a day trader, and this is a 5-minute chart. So starting off, whether you're taking on buy signals in the marketplace, can you imagine as a day trader, you know, if you're in this environment, you definitely want to be using what? Shorter term time frames. But the methodology of how to trail and take buy signals on the market and then look for if the market truly is bullish, it shouldn't take out these levels. And when it does, you get little minor trends down. And then when it takes out the last conditional change to the upside, you get some follow through to the upside. It is an incredible system to help people formulate where to place their stops and as well when to look for key reversals. So here's a 60-minute chart over the last few days. And you got to admit, we've had excellent action for downside, upside. There's been something here for everybody. There really has been, right? How do the pivots work? Like I teach, I never like to sell support. I like to look for buy signals off support, and if we break support and break below a last conditional change, look for the markets to come down. If the market goes up and you're looking for a resistance to sell, no sell signal. Where's the sell signal? It doesn't exist. And if the market's going to go down, what does it have to do? It has to break the white line in the sand. Instead, straight up. So there is, if you just understand color coordinating and arrows, I think people will have a fabulous, successful time. This is probably one of the most dynamic systems that I've ever seen developed. And I'm not saying it because it's based off my methodology, but it really is a dynamic system put together that tells us emphatically where's the strength coming from. Are we in buy signal? Are we in sell mode? Where are we in relationship to the pivot points? In fact, for the week, if you go down here, a couple things. This is the material sector, by the way. In the resistance column, you'll see that there's a gray color. Some of this is gray. What that means, you see like this right here, IP, International Paper. What it means is it's already gone through its predicted weekly target resistance. That's pretty crazy. That's how strong the market is. A lot of stocks are already at their, not only their daily resistance, but we've blown through weekly resistance. In fact, here, even in some of the energy stocks, believe it or not, like, for example, PSX today, up damn near 5%, a lot of names are already through the predicted resistance. So this system really helps people put together a game plan. Now, I took it a step further, and many of you are stock traders. And this is what I think a lot of you guys came here today for, to really get a little bit more taste of what, how to gauge where the strength of the market's coming from. What you're looking at here is a breadth analysis with volume, my indicators, person's PPS, buy and sell signals. One of the things that we're able to do nowadays, and a lot of people look at this thing called the NYSE, and you look at the cumulative value of the advanced decline. The funny thing is, if we take a look at the market, even the Russell's broken out of old highs. You've taken a look at the advanced decline on the S&Ps, on the NASDAQ, and the Dow Jones, and the breadth. This is a broad-based rally, folks. Don't fool yourself. Rising tides lifts all boats. We are seeing one of the very first times in a very long time, I'm here to tell you, we're seeing an appreciation in the breadth and with combined effort of volume, by the way. The cumulative rise in volume. Note here, I think I did a good job of drawing a straight line. Some of my members will know that I'm not good at drawing that straight line. We are in a kind of a breakout mode, and note that we have launched right off of this green area, which is called the quarterly pivot. So the market is in launch mode. Hard to see the buy signals down there. I'll put it back into focus. But the rally in the overall Russell is going up with a contribution of a liftoff in a huge accumulation of stocks. And that's what that AD line is all about. It also shows that we're going up with a uptick in volume, and that's what I mean in concert. We haven't really seen that before. So like earlier in January, we got a rally. The AD lines were kind of lifting, but the volume was going down. This time around, we're lifting, and we're lifting with an accumulation of amount of stocks going up with the index and on stronger volume. So it's looking a lot healthier for the Russell right now, which is something unique. It's also done it with the NASDAQ 100, which is really unique. And now, in hindsight, everyone will go and say to themselves, yeah, you know what, maybe that was just a trading range. So the idea is, as we start to move away from the moving averages and as we start to lift off that quarterly pivot, you know, that blue line in the sand is the quarterly pivot. And in the Qs, that's 109. That's going to be like a magnet. With this type of appreciative move in the advanced decline, it's my contention that we get back up to that blue line in the sand up in here, and then I can kind of formulate an idea. When it gets there, here's the key. If it gets there, if it gets to this level, this line in the sand, and it's not on strong volume, that's a good spot of resistance that maybe we want to look at selling. So I'm here to say that finding out where the money flow is going, right now we have a rising tide lifting all boat concept. We have green as far as buy signals. Now, if you've seen my work before and if you've seen my buy signals, what this thing, and I just clicked on because it's the first thing in my face. If I wanted to look at something dynamic, I'd probably, let's go and look at Prudential. So Prudential has generated a 60-minute buy signal earlier today. And if you notice here, where's the buy signal? It's right there. There's your buy signal. It generated a gapped higher. And as soon as that 60-minute closed, a white line in the sand developed. So if you wanted to say, well, this looks very compelling for an upside move, and we broke out of the area of resistance, and you wanted to go for a short-term trade, and in fact, what this system is designed to do is say, if the market's truly bullish, then it's going to trend higher, and it's going to put where to place your stop loss. The white line in the sand, your stops, X marks a stop, is where your stop would go below. Now, this is just a 60-minute chart. This concept works for a daily, weekly, monthly basis. So can you imagine if all of a sudden Prudential, now that was a 60-minute chart, this is a weekly chart. We're on two different time frames. Now what I like about Prudential, and this is where that strength in numbers and that relative strength chart, the thing that looked like it was from a tie-dye t-shirt era, if we start to see a recovery in strength in numbers in the insurance companies, if you take a look, the volume looks pretty good relative to the price. It's almost like a bullish convergence pattern. And this, I didn't even get into this. This is a specialty histogram showing that the bearish trend is dissipated. But notice what's happened. It came to that green person's pivot support. What's new and exciting is it's generating a bona fide PPS buy signal. So Friday, which is the monthly unemployment report, we could see if we get a close at around this price or higher, it's going to generate a buy signal at quarterly support. Good news and bad news. The quarter's over at the end of the month, which tells us that we might see liftoff, and where could we get to? Technically speaking, if the market does launch up, it could get back to just its quarterly resistance, which is that blue line right here. Ironically, that's just about where we started the year off of when we gapped lower at 80. That's approximately a $10 move from where we're currently at in Prudential. So you may not want to buy Prudential. I get that. But maybe you're an ETF trader, and oh, lo and behold, this is the ETF that mirrors, that is the insurers. It's the KIE. Funny thing is, look at the KIE. It generated a high close doji 2 weeks ago, and it is in liftoff mode. So the insurers have already started to ascend and generated a buy signal. How valid are the buy signals? Well, it doesn't happen often, but you can see here every once in a while we get these orange colored candles, and typically it has a good history of when it generates an orange candle, the price goes up for a few period of time, right? And that I think is a good logical explanation. So for a stock trader, this is really dynamic information that gives you the health of the market at a flip of a finger. And that's what's exciting about what we put together, from book to doing it by hand 20, 30 years ago to what we have here, all in one simple package. It is incredible. So that's what the last conditional change candle, the white and the gray, is all about. The daily pivots, listen, it gives you, without a doubt, how to day trade. It gives you, for TradeStation, this is the most downloaded app I was told that they have. It's a trading warning system. It happens in advance. It tells you, based on yesterday's action, what tomorrow's potential high and low would be. Now, you need a trigger, and it helps to have other analysis tools there that we'll explain. But boy, I'll tell you something, more times than not, you see the market, you'll notice that with a person's pivot package, we have the one green and the one red, because that's what we're looking for the main trade range to be, and it's predicted from the prior time frames data. This is just a daily pivot, and I'm using a 60-minute chart just to illustrate how effective it was in that data sampling of time. Let me go over, I think I already did this. Someone had a question on how they use that for day trading, and if you notice, one click of a finger, and I'm going to go right over to the ES, and I think I already did this for you, but I'm going to do it again. Here's the, looking at a 60-minute, you can see the days, and we can just narrow up the data field, and you can see almost, I mean, it's just been, it moves with the market, right? It helps us to identify where the market's been and what the potential range of, and days of resistance and support is going to be. Now today, thank God it didn't work, because we're all pretty long in our community here based on our work, and I mean a lot of different stocks as well. So today was kind of a really nice day to see the follow through. The breadth was strong. The advanced decline analysis was really strong. One of the comments that we made in the room is if the 80 line stays strong in the last hour, it's going to see follow through, and boy almighty, it did see some follow through. So not every day is going to work. That's why one indicator needs to be combined with a different non-correlated indicator. But as you can see, the power between the system is running into the scans. When do we get these buy and sell signals, which is really cool, because we have these things scheduled at the end of the day. Every single day we run these scans. In fact, every day they're scheduled to run, so it's already run for today. In fact, this is today, the scan that came out for tomorrow. We've got, these are the names that populated in a really neat scan concept that we put together. I'm going to highlight over here. Watch what this says. Show me how many stocks in the S&P 500 are generating a daily buy signal when they're going to be in a weekly buy mode. Now, what does that mean to you? It should mean if the weekly launched into a buy signal and maybe it pulled back a few days and all of a sudden we've got a daily fresh buy signal, it might mean a what? A continuation pattern. That's where we're running that kind of scan. How many stocks today just generated in the S&P 500? Just like make sure I know what I'm doing here. And see, we've got S&P 500. How many stocks today in the S&P 500 generated a fresh new buy signal? We had 60. Wells Fargo is one. Semantic, I'm just looking at some, as you can see. Let me share this with you because I love this. This is really just an exceptional feature for me. I always like to find out of 60 names, what was the concentration of stocks that generated new fresh buy signals. We had some in basic materials. We had some Masco, Honeywell, capital goods. We had a few like Chevron in the energy space, Cameron International in the energy space, Phillips 66. Ooh, nice little pattern right there. We also had, as you can see, FMC Technology. So we had a bunch of, as you can see here, a bunch of new fresh energy in the OIH sector, Schlumberger, right? And then as we get through, wow, look at the financials. SunTrust, right? T. Rowe Price, BlackRock, Travelers, coincident, that's an insurance company, right? Allstate, oh, another insurance company, there it is. So we're starting to see today fresh new buy signals. Now, here's something I didn't share with you. This is a monthly chart. Last month, Allstate generated a high close doji and a PPS buy signal, and out of the box, it's up. 4 weeks ago, it generated a weekly high close doji. So it's now in a higher degree time frame buy mode, and so we probably would be looking for what? A continuation to the upside to maybe test 69.5. That's another $5 move, 8% or so. So right now, I can take a look at where's the strength of the market, what happened after today, what new fresh buy signals populated. Here's one. I mean, Lucadia, U.S. Bank Corp, and again, as I just mentioned, Wells Fargo. All right, so how does that help a day trader? Well, let me tell you. I got news for you. The more stocks that are in a buy signal and the more of the stocks that came from not making new fresh highs, but we're talking about what sector has been beaten up really badly. Energy and financials. If we get a recovery in the financials and we start to see an appreciation in a lot of these financials, and if we see an appreciation in some of the stocks in where? The energy sector, how much would that weigh in on further gains in the S&P 500? Probably a good portion. So the more stocks that start generating buy signals at the end of every day, I'm not talking about being positive and up on the day. I'm talking about generating the PPS buy signal, this arrow right here. That's what we're talking about. The more stocks that generate that buy signal, that's the more power that we get behind what we're trying to get the system to tell us, okay? So daily pivots are important, but boy, getting a huge advantage of finding buy signals before everyone else, that's the secret to this system. That's why this is probably one of the most powerful systems and packages put together. It combines in one snap of a finger, I know, not just like a heat map of what's being, percentage gained. I'm talking about how many stocks are in a generated buy mode and are breaking out. That tells me a much better, healthy picture of the market. So again, we put together an incredible package to find out, is it a broad-based rally? Is there only money going in the small cap? Is there only money, is the breadth analysis only reflecting an uptick in the S&Ps? Or are we getting a broad-based rally in everything? See, that's what the system is designed to give us. So the pre-programmed scans, I'm telling you right now, folks, as a stock trader, as a futures trader, as a trader in general, this is a dynamic product. And what I'd like to introduce you to, and you know what, we'll have a follow-up if you're interested in this. Find out more about this. This is probably, and I'm not dead serious, one of the most advanced systems for a retail trader. I'm here to tell you professionals with Bloomberg terminals don't have something as advanced as this put together that gives them the relevant and the right information at their fingertips. Retail traders now have an advantage over fund managers. I'm here to tell you that. And we do share this with a lot of fund managers that are interested in trying to do better for their clients. Because quite frankly, the old school way of doing market analysis is just not working well. And this is picking up some real dynamic stuff. So I wanted to introduce this to you, number one. And if you're new to knowing who I am and what I do, then take this opportunity to learn more about what we put together. I think you're going to find out that you're going to be pleasantly surprised with everything that we've put together. So what I would like to say is that, number one, if you wanted to take a TradeStation indicator trial, if you're a TradeStation client, definitely let us know. It's a TradeStation trial package. That's what TS stands for. If you're already a TradeStation customer and you've downloaded the person's pivots, again, it's just the dailies that you get. But if you are interested in finding out more about our TradeStation indicator trial package, the lifetime package is $3,500. And with the lifetime package, and it's also, I believe, still eligible for a commission rebate program, you get your trading course material, which is applied to the purchase, and you get access to our PUG sessions. PUG stands for Persons User Group. Now, all our videos, all our past groups are recorded, and it teaches you how to do really unique things like, let me share this with you. This is kind of a cool trick. So I want to know, like we have this one little scan here that says, show me a daily high close doji. So I'm going to go down to formatting this, and I'm going to scan criteria, and I share this with people how to do this. And if I just open up this, notice where it says, show me a daily high close doji. What if I want to do a 60-minute? What if I want to show how many new fresh monthly high close dojis are out there? All I have to do is I can customize the time frame that I want. Then I can go over here to Symbol Universe, and if I want to say, well, I want to find out how many stocks in the NYSE, or you know what, I just noticed that there's a lot of stocks in the financial. So maybe I can go and do a specific subsector search, find me a monthly, how many stocks in the consumer financial services, and I can nail it down to subsector specific, or regional banks. Show me how many stocks are generating fresh new buy signals. That's pretty significant work for traders looking for great opportunities in the marketplace. So perhaps maybe you don't want to trade an individual stock, but boy, you know the concept strength in numbers, and if you get more and more of these buy signals, perhaps, you know, as institutions, they don't go all in. What institutions do is they buy some here, they buy some here, they buy some here, they spread it out over time, and we're able to pick that up. And that's what's really important. And that's why I've been sending, and I send those tweets out, because for those that understand the high close doji, they get it. And it's a very powerful indicator. Anyway, that's the end of the today. I wanted to go through what is the health of the current market, which I just shared with you guys. It is a very strong breadth movement across all top 6 indexes. We, at the very least, will be looking for the market to re-challenge the yearly opening range. We have some further upside targets. Our first primary target from mid-January was 196 in the spiders. We've attained that. Now the next target level is about the 201 level. The only caveat about this move here is that it is on light volume, so we got to see if maybe there's a delayed reaction of volume. Tomorrow, by the way, we have what? Beige Book. Friday, we have the unenjoyment report, as we like to call it. As long as these levels of our breadth analysis holds, and as long as these we continue to see, as we did today, new fresh buy signals evolve, to me, I think that the surprise is to the upside. Everyone was bearish this market. Funds are caught short. It's the end of the quarter coming up, and I think money's going to find its way from the sidelines into the market, as today's move was pretty much people finally coming together. Last but not least, I'd share this one last photo with you here. It's kind of interesting. If you take a look at the NASDAQ, and take a look at the Qs particularly, notice that we are now officially in both marketplaces, both the futures, that is, and last week we generated fresh buy signals on a weekly basis. Looking at the spiders, by the way, we were in a buy signal several weeks ago and a high close doji, which, you know, was a little iffy right there. And what I'm talking about moving forward is the very next stop that's going to first and foremost, it looks like it's approximately, let's call it 201.40. I don't want to be too precise, but somewhere around 201. Generally, the first test of resistance, that's after a move like this, that's going to be probably the test of fate for this market in itself. So watch that 201.5. That's the next. 196 was the first target. 201.5 is the next target. And if it gets up anywhere higher than that, it's probably because markets tend to overshoot the runway a bit, somewhere in that mid zone there. But we'll put that out. We do on a daily basis and a weekly basis in our weekly thoughts. And if you're interested in finding out more about this product, if you're a stock trader, if you're someone really serious about trading, this is a dynamic package that was put together. With that said, I thank you guys very much. You guys have a great month. It's been a fabulous, today was just outrageous. A lot of names populating, by the way. Some names you might be familiar with. This is one that populated. We joked around the room about it, by the way, Whole Foods. I joked around it because I'm a cheeseburger, potato chip guy. I'm not really in shape. You've seen that if you've seen me in person. But Whole Foods is just such a dog. It just hasn't been able to get lift off anywhere. But the volume's been kicking in, and the next target here, we're looking like 35. So Whole Foods actually has a shot. BABA, B-A-B-A, that was another one. Today, finally, today, followed suit with that high close doji. And then last but not least, may I take a look, if you'd like, with the XLB, the materials sector. This has already gotten up to, ironically, what I want to point out to you, it already got back up to where it started the year from. Remember, that's where we started the year, materials. So materials are just about right back to where that gap for the year started, right? And there's a few others like the industrials, believe it or not. The industrials went beyond where we started the year, which is very nice to know. And in addition, this is that stock, the year of the cat, already back up. Who would have thunk Caterpillar? Is this the time that cat's going to come back? The fact is that the momentum was showing a big change was coming, and the trigger just finally arrived, to kind of speak. And this is without a buy signal on a monthly basis. But I can tell you this, guys, if we clear the quarterly pivot, which is like 69, this is a stock that could easily see some growth back up into the 90s over the next 3 months. It's in a seasonally strong period of time. Keep your eye on that. A lot of the stocks in this sector, including Deere, are starting to see some accumulation there. So anyway, enough said. I'll let you guys go. I hope you enjoyed today's presentation. Really, stuff has been a nice thing. So with that said, we hope that we can help you out, because this, like I said, is an incredibly powerful package for traders. It's just picking out dynamic trades, number one, keeping us on the right side of the market. It's the combination of the right tools at the right time, and that's what's working. What's amazing to me, and I hope I don't come off sounding too excited, but I pinch myself. I mean this sincerely. Many of you know that I'm pretty straightforward. I wrote this book. I put this out a decade ago, and the material to this minute is working as it was written, and to put it together in the technology that we now have is just unbelievable. This package put in the right hands with the right person who's teachable and trainable is going to do incredible wonders for that individual. With that said, if you're interested in further information, give us a call, come to or visit our website, contact us, and we'll give you more details. Everyone, have a great evening. I thank you for your time, and I wish you well for the rest of this month and the rest of this year. Take care now.